What's going on, everybody? Jeremy Ritz, Courage Pays Better Than Fear Trading, here with another Courage Mini. And today we're talking about a chart pattern known as the rising wedge. It is inherently bearish, and I've got my red on appropriately enough. T-shirt's even red. But we're going to talk about this pattern, how you can utilize it in your day trading, swing trading, or how you can use it to anticipate when a reversal is coming in the markets or with a specific ticker. And so I'm excited to get into that with you here today. Again, the rising wedge pattern, let's check it out. So we're talking about the rising wedge, and here is just a general infographic that I created to help really drive home the concept of this pattern. And so you can identify them on your charts and you can understand what they mean in relation to your trade. And as I mentioned at the outset of this video, the rising wedge is intrinsically bearish, which means if you see it, it either means there's going to be a continuation of bearish sentiment. We're going to see it drop further, a ticker drop further, or we're going to see a bullish pattern reverse and we're going to see the trend change. Okay. And so when we're talking about a stock that is in an uptrend, so if we look here at this example, we could see the stock moves higher. And what happens is the price action wedges, right? That's where the whole wedge concept comes into play. And it converges together to where it almost meets at a point. And then what happens is once it breaks below that lower support, that's when you get the follow through, and that is where you get the drop, and that is where you get a reversal and a bullish trend. So again, rising wedge can be a reversal signal and a bullish trend. And if we're in a bearish trend, if we're looking over here at this example and we're dropping lower, what happens is we hit a bit of support, we bounce up, and then like we were doing over here, we're wedging with the price action till we get to a point where it can't wedge anymore and it breaks below that support, and then it drops even further. So this leads to a continuation in a downtrend. And then what we want to look for in terms of volume is as that wedge is building, as we see it stretching out and getting tighter and coiling, we want to see the volume subsiding. We want to see it gradually decreasing. And then once the breakout occurs and we crash down through that support, we should see an increase in volume on that breakout. So again, practice looking for these on your charts, daily charts, 3 minutes, 5 minutes, 15 minutes. Really, you can find these on all time patterns, but it will help give you a sense of what to anticipate with a particular stock that you're trading. And we're going to take a look at this on a chart from today, and we're going to look at the company Roblox, RBLX. It gapped up on earnings. It dropped today a bit, and we saw a rising wedge and a beautiful crash through support and continuation pattern. We'll look at it just so we can illustrate this concept for you on the charts. Let's check it out. And so here is an example of a rising wedge here on Roblox. Again, RBLX is the ticker symbol. And you could see that Roblox had a nice push higher on earnings. It gapped up. It moved sideways on Friday. And today, when we're looking at this chart, we could see it did push a little higher there pre-market and then had this beautiful bearish engulfing candle that sold down right there at open. And then what happened is that we started wedging higher, right? We start seeing this price just kind of ping-ponging back and forth off this support and resistance with these trend lines. And then we could see that as the price action is getting tighter, as this is coiling, as that wedge is getting closer together, we see the volume decreasing. And then right when the breakout occurs, we see a nice spike in volume, and then we get a drop lower on Roblox. So a really good example of a rising wedge here. And you might ask the question, well, what should be my profit target if I'm trading a rising wedge? And some people, what they'll do is wherever they mark the wedge pattern out from, they'll measure the top of the channel to the lower part of the channel or the trend line. And so here it's about $1. So right where this breaks out, $1 lower would be the target that you would go for. Obviously, you can extend that based on supports that are in place that you feel it could bounce. But just a standard rule of thumb, measuring that upper part of that channel where it starts down to the lower part of that channel, that will give you what the target can be with the breakout of a rising wedge. And so there you have it, the rising wedge pattern. Again, inherently bearish. I'm not wearing red on purpose. It just so worked out that way. But you can use this to your advantage to spot reversals and bullish trends or continuations in bearish trends, and it can be a successful pattern. So hopefully this was helpful for you. Leave a comment on the video. Share this video with your other trader friends or someone who's getting into trading, and let me know some topics that you'd like to see covered in these minis. And be sure to check out the Traders Podcast here at Courage Pays Better Than Fear, and I will see you next time for another Courage Pays Better Than Fear mini. Take care, everyone.